Right, well, let's turn now for a look at how markets are reacting to this latest Fed commentary. Joining us now is Yahoo Finance's Ines Ferre. Hey, Ines.
Hey, Rochelle. So you mentioned the markets earlier. We saw that equities open near the flat line. They are lower right now, but we're taking a look at the U.S. dollar index and how this has reacted to Fed Chairman Powell's comments. Take a look at the U.S. dollar index going up to 105.31. It was at 105.07 just earlier on. So as the dollar index rises, as the dollar rises against other currencies, you are seeing pressure on assets, on commodities. I also want to point out what's happening with the bond market, because we've seen the inversion of the yield curve even getting worse. So if we take a look at the 2 and the 30, that has blown past 100 basis points. You're looking at the 2-year yield now at 4.96%. You're looking at the 30 at 3.88%. That's a psychological level when it comes to the yield curve inversion. And we're also taking a look as well as the markets, as I had mentioned earlier. We're watching the Dow that's down 0.7%. The Nasdaq down 0.6%, the S&P 500 down 0.8%. And then if you look at their sectors when it comes to equities, the biggest losers being materials, financials, real estate, sensitive to rates. Rochelle?
Indeed. And Ines, of course, we're also watching markets reacting to political hawkishness and rising tensions between the US and China. Tell us more on that.
Yeah, that's right. Those comments from President Xi regarding the U.S. and China, that's really taking a little bit of a hit when it comes to the markets. We're watching the Chinese ADRs, and these have taken a hit over the last month, really, because of what's happening in China, the recovery there. BABA down 15%. Over the last 3 months, you can see the action when it comes to these ADRs. But what I really want to take a look at are also commodities, because the markets are not only reacting to those comments about tensions, more political tensions between the U.S. and China, but also reacting to the import-export data that has come out of China being weaker than expected, despite the recovery, despite the reopening in China. So if we just take a look at the commodities right now, we're watching WTI that had been higher over the last 5 sessions. Well, today, WTI down 2%, trading just above $78.80 per barrel. We're also watching Brent crude lower at down 1.7%. And just to note what's been happening with oil, it's been trading at in a range bound, about $10 range bound since the beginning of the year, since the end of December. Natural gas seeing a little bit of a bump today after it fell yesterday, but also taking a look at copper futures, because remember that China is the biggest exporter of copper. Copper futures down 2%. As that data has come out of China, the import-export data weaker than expected. There are concerns about demand going forward. Of course, concerns of a recession in the U.S. and Europe as well. Rochelle?
Certainly makes sense as to why we're still seeing markets searching for some direction at the moment. A big thank you there, Ines Ferre.